FS Securities. We are an education and information company on the Gold Coast in Queensland, Australia. And today I'm going to actually go through a presentation about a particular pick that we have found. The company is called Senex, and the code is SXY, and depends on what platform. It could be a dash or a point. It could be AS or it could be ASX. Well, this company is actually an oil and gas exploration company. It's an Australian company, and it operates in the Surat Basin and the Cooper Basin. Well, okay, we're going to go through some technical and fundamental analysis, and we try to understand how far this company can go. Well, the first thing I'm going to say is that this particular stock is for aggressive traders only. At the moment, the trade price is 28.5 cents, and we expected that subject to the price of oil and gas, it may go up to 45 cents. We actually categorize our clients or people who follow us into different categories, depending whether they are investors long-term, they buy and hold for several months, maybe years, or the conservative traders who are actually in the medium term. And at the moment, according to our technical analysis, for conservative traders, aggressive traders, and very aggressive traders, and very aggressive traders who actually trade in and out of the market maybe 2 or 3 times a week, we are those traders into a bullish trend. We always put a trailing stop loss in our trades, and we look at maximum 20%. If you buy today and you get in at 28.5 cents, this presentation was done on the 20th of July 2020. And we believe that if the price drops to 22 cents, and provided you have a trailing stop loss, this number will go higher and higher as long as this price goes higher and higher, because the trailing stop loss will move up with the price. Now, this is our conclusion. This company turns over $100 million in revenue. And look at their profit before interest, tax, depreciation, and amortization. $40 million, 40%. So this is actually a reasonable company and has got lots of assets. It's got sitting on $62 million in cash in the bank right now. Well, if the price goes up as we expected, provided the coronavirus doesn't really bring any unexpected dilemmas, we expect the price to go at least to 45 cents. And we expect the revenue from 100 million to at least to be 50% higher than we are at the moment. Okay, a little bit of fundamental analysis. As I told you, it's got $62 million in cash at the end of June. I believe that is still at least that number at the end of June 2020. But look at the breakdown. In total, the assets is 500 million, and the liability is 145 million or 148 million, and the total equity is pretty strong. They don't really retain any earning. They give it all to their share traders. All right, now in terms of market capitalization, it's not a small company. It's $500 million, and you can see that the trailing price earning ratio is too high. However, that can mean two things. It's either that the price is too high and should really come down, or the expected earning is expected to go higher, and therefore the price earning ratio, and that's a trailing price earning ratio rather than the PEG, which is price earning growth based on future growth, and we haven't got that number yet. But anyway, we can see that the profit margin is 8.9% and the operating margin is 7.6%. Okay, now return on asset is 0.8%, low. The revenue 106 million and the earning before income, before interest, tax and depreciation and amortization, nearly 44 million. Okay, now the beta is 2.3, which means that for every dollar that the market goes up, this stock should really go up by 2.3 times. Look at our technical analysis. This is actually the last 50 weeks. You can see the price today is 28 cents. It's almost 18 cents below where we started to monitor the price. However, at one stage it gone up to 20% and then dropped because, of course, the coronavirus and because of the various decline in GDP, and the whole world was sounded like it was going to collapse. But look, the last several weeks, the last 20 weeks, the market started to go higher. And we expect to do at least to go another 18% in the next few weeks. The daily chart, again, you can see we were down to 26 cents and now we are 28.5 cents. Now, oh, by the way, before I go, the mechanical system that we have designed at FS Securities looks at different strategies for different type of traders and investors. For the investors, we look at the monthly and the weekly charts, and we must find at least 5 indicators to tell us bullish or bearish or neutral, and it's got to be confirmed by the weekly charts. 5 indicators out of 8 on the monthly and 5 indicators out of 8 on the weekly. For the aggressive traders and the traders, conservative traders, we start with the weekly and we need confirmation from the daily. And at the moment, these indicators are telling us bullish for conservative traders and for aggressive and very aggressive traders, bullish. The first resistance before the market may decide to actually take some profit out is 31 cents. And if it goes above 31 cents, it may go up to 34 cents. And then, of course, you've got the third and fourth resistance. On the downside, 24 cents and 20 cents below it. But we have to be out around 22 cents if it drops to that far. Okay, now looking at the charts, this is the weekly. You can see that the indicators that I was talking about, the stochastic, if you just follow these indicators, when the blue line is above the red line, that's bullish. And we are in actually the overbought area. However, as long as that blue line, the stochastic, is above that line, we remain to be bullish. If it starts to drop below it, then we look at where the blue line in relation to the red line. When it comes to parabolic stop and reverse, this is actually the red dots below the candles. Green means bullish, red means bearish. Bullish means up, bearish means down. And at the moment this week, we've had a very, very good week last week. And this week so far, and this was done on Monday, I believe the market may likely go higher this week. And we can see that the market last week went really zoomed up and then went above the 200-day moving average, which is very, very bullish, that is. And then closed or was trading on Monday around that line. We want to see those candles above the 200-day moving average, shown here by the black dot line. In terms of stochastic, bullish. The volume, as you can see, has really increased quite a lot. The price going up, the volume going up, that's extremely positive. The 9-day moving average above the 21-day moving average, that's 9 above 21-day moving averages, that's bullish. The parabolic stop and reverse, bullish. All the indicators on the daily, very strongly bullish, as you can see here, we've indicated. And you can see the MACD is bullish, the DMI bullish, the RSI bullish. They're all indicators that we follow. DMI is directional moving indicator. That is actually RSI is one of the indicators as well. So I mean, if you want to learn about those indicators, come and join us at our programs. We run courses, and these courses are available to everyone from beginners to experienced traders and investors. And you can see here that from Morningstar, the fair value is about 41 cents. So we are nearly 32% below that fair value. And the fair value is based on what we expect from the trade. And some expert criteria, as you can see here, the earning trend has failed, market capitalization has passed, earning per share growth rate in the immediate pass, but failed the PE ratio because it's too high, but then expectation. The yield fail, total debit to equity pass because it's got lots of cash and more asset than liabilities. In terms of PEG, it's 0.3, which is good. We like it to see below 1.2. This is actually the price earning growth. So it's got lots of positive growth. Cash flow per share is only 3 cents. And dividend, they don't really pay any dividend at this stage. So that's interesting. Okay, so the industry, as a matter of interest, provides a negative return on equity, and this company provides positive. Okay, the recommendation is a buy. Okay, well, that's all from me here. Happy trading, and hopefully you make some money.